Now we're looking at the comp Q, and before we begin, I must remind everybody that everything we speak about is for educational purposes only, never to be construed as a recommendation to buy or sell anything. Well, this is a very interesting week. We began the week by engulfing Friday's trading activity, which looked like the beginning of a bearish move, especially in light of the fact that we put that move in on fairly high volume. But it engulfed it and actually reversed that trend, and we had a follow-through day on Tuesday. But since then, Wednesday, Thursday, and Friday, we have been very indecisive. We put in a bearish harami on Wednesday and a shooting star type pattern yesterday, although not classic because the wick needs to be a lot higher or longer, or the real body smaller, one or the other. But the message that's being sent from that candle is it rejected higher price levels. The candle that was put in today was bearish for a good part of the day. It actually came back up and closed very, very slightly down for the day. The volume, average, nothing outstanding, but I do feel it's turning over. When you take a look at the slope of the ascent here, almost parabolic here, and then most recently more of a sideways or angled, but certainly not to the degree that the move was up from this box. So where would we go from here if we began to retrace? The logical thing first, and as far as I'm concerned, is to break the low that was put in here on Monday. If it breaks that low, and it should continue down and retest the swing high that was put in mid-January around 23.25. If it goes below there, then this box, as I had alluded to a little bit earlier, in February would be a logical place to take a look, as well as this consolidation from November and December. We also have a swing high that was put in October that should act as good support as well, just below 2200, and then finally we have this swing low at 2100. We also have this double bottom way down here about 2030, in that neighborhood. The stochastics has definitely turned over and has penetrated the 80 and is well on its way down, and the MACD is crossing over as we speak, along with a bearish divergence on the histogram. So my feel is that we will in fact come down and begin to challenge some of these levels to see if they are in fact stout support. As we know, old resistance becomes new support. Okay, so that's the picture for the week. In summary, I feel like most of the indexes are pretty much the same, and I feel that we will continue to retrace and roll over, and we will see in fact if there is any credibility to the move, if there is some push behind it from the investment community to bring it back down a bit lower. Well, I will tell you to trade with caution, because certainly it is an uncertain market, and I would suggest that you may want to consider being hedged and be nimble and pay attention to what you're doing. And with that, I look forward to speaking with you next week.